Good morning, good afternoon, good evening. It's Dr. Janice Hooker Fortman with the Relationship Matters TV show. I hope everyone is doing well. Spring has sprung, at least here in the Midwest. Unfortunately, I can see where up in the Northeast, they're having snow and blizzards. But I hope if you are in the Northeast, I want you to know that spring will be coming your way soon. I started thinking, what am I going to do to celebrate spring? Well, guess what? I played the lottery, won $50 million. So therefore, how am I going to celebrate? I probably won't do this show anymore. I'll probably retire to Hawaii, Maui, I think. And I hope you all wish me luck. April Fool! Wait, I wish. Number one, I don't play the lottery. And as they say, if you don't play, you can't win. However, what I do with my money, I try to invest it. And I think that's a better way to go. And why am I talking about investing? Because I have on my show today a stock market guru. She has a journey that I just glorify in. And I want to bring her on. Her name is Charlene Rhineheart, the Dividend Queen.
Hi, Dr. Janice Fortman. Thanks for having me.
Hi, Charlene. How are you today?
I am doing amazing, especially since I have a chance to be on the Relationship Matters show.
Well, thank you. Thank you, Charlene. Before we start, I'm going to show you something that I found.
Oh my God, that's awesome. You still have it. That is awesome.
How many years ago was that? I don't even know.
Whoa, that had to be 8 or 9 years ago.
Well, Charlene is a Toastmaster, and as you can see, she was Miss Corporate America. She was well on her way to her financial guru dividend queen journey. So I said, I started looking, I'm like, I still have that. Let me show Charlene.
That's amazing. Yes, that's from 2015. It was actually 6 years ago.
Oh wow. Okay. Well, let me tell my audience about Charlene. Charlene is a CPA, and she's also a PMP, which is the world's leading project management certification. She's the chair of the Illinois CPA Society Tax Individual Committee. In 2019, she was the AICPA Leadership Academy graduate, and also she was designated in 2019 as the CPA Society Woman to Watch. She's the founder of the Career Goddess Academy and Wealthy Women Daily. She speaks at colleges, corporations, and she helps people fund their dreams and create the lifestyle that they want and they love. So, you know, I'm waiting because I want her to help me create my lifestyle that I love. So she's going to tell me how I can get to Hawaii and stay there and not live in a 400 square feet condo, but a big, huge condo overlooking the ocean. Now, this is something that amazes me because Charlene paid off her student loan debt at age 22. She became a CPA at age 23. She left a dream job to live her dream life at age 28. And she also has a book. So we're going to talk about that, and especially about the student loan, because well, my audience kind of knows how old I am. And you know what? I'm still paying my student loan. And I have some friends who are my age who are still paying student loans. So we want to know about that. But first, the first question I want to ask you, Charlene, is it says that you had a dream job. What made you quit your dream job? And how did you get the kahunas to do that?
Yeah, so I always saw myself as a speaker, entrepreneur, and writer. I landed this job in financial services during the recession, so I was very grateful to have that job as a financial analyst. I was climbing the ladder, learning a lot. Then 2015, I won the title of Miss Corporate America 2015. I knew when I won that title that I had to make a decision. Do you continue with your old life, or do you dive into something new, that dream life that you've always had in the back of your mind? And for me, that was that perfect opportunity. I was 28. I thought to myself, let me take a 1-year sabbatical and see what will happen if I gave myself permission to do all the things I've always wanted to do. I took that 1-year sabbatical and never went back. So it ended up being more than a 1-year sabbatical. I just continued to live on that path, and I started investing and just being intentional with my money so that I could continue to live that life now and in the future.
Okay. So what got you interested in stocks?
Yes, so I love stocks because I wanted something that would give me passive income. I did not want to work hard for every penny that flowed through my pocket. I wanted to be mindful of how my time was allocated. I realized, hey, we only have 24 hours in a day. We need to manage our health. We need to manage our family life, our passions, and whatever else we want to do, the legacy we want to leave behind. So in order to maximize that goal that I had to learn how to make my money work for me. That was the only way to be able to maximize my life right now. So I started investing in the stock market more. I had invested when I was in college, and this was in 2007, 2008. So we know that a lot of stocks went down, and my stocks did too. I did no research. I did everything that a person is not supposed to do. And so 10 years later, I got back in it, stronger, better than ever. And I met Dividends. Dividends became my best friend because it showed me, hey, you don't have to worry about the stock going down. You can make money every 3 months, every 6 months. Whenever a company pays a dividend, you can make money even if the price of the stock is going down. And so that's why I enjoy dividends, because it's a stream of income that you can gain access to for life.
Okay, so now, so you're talking about dividends, but how do you know? Let me back up. So was it self-education or a self-study? Did you take classes? Did you have a mentor? You know, I mean, a lot of us are interested in the stock market, but how did you get to where you are?
Yeah, so I started in college with my friends, and that's when I did everything wrong. I worked in financial services. When I was working in financial services, I studied financial statements. I helped one of the largest banks in the world create financial statements. Now, if you are going to invest, fundamental analysis is key. When I say fundamental analysis, I'm talking about financial statements, learning how to read a balance sheet, an income statement, the cash flow statement. These three statements allow you to assess the health of a company. Just like we assess our health, we go to the doctor. Well, we assess the health of a publicly traded corporation by analyzing their 10K, which is their annual report, or their 10Q, which is the quarterly reports that they produce. So we look at all these financial numbers, and the company will decide based on their health, based on their record and trends in the market, they will decide if they will give a dividend. And so all of these conversations are had by the board of directors and company leadership, and they share it with the public. But this time I got to see what happens behind the scenes.
Okay.
I was helping with the press release, and I was helping with the earnings call. So all of these corporations, they tell you their financial results. It's like a party for investors. They'll tell you how they were doing in the past quarter and what they expect to do going forward. So you can listen in. Anybody in the world can listen in on the calls for any of their favorite companies to see how the company is doing.
Oh, well, that's something I didn't know. You know, that you could listen. Anybody can listen in.
Anybody can listen in. So I still listen in to different companies now. It doesn't matter what company it is, as long as it's publicly traded. You can go to their investor relations link on their website, and they will let you know when their press release earnings call is. And you sign up, and you'll be able to join the earnings call and hear everything that the CEO and CFO are saying about the company. It's pretty cool. It gives you like that insight, that access to the people behind the numbers, which is really cool.
Okay, so now, but if you have not invested in that stock, once you listen to what they're speaking of, then what do? You go and you invest in that stock because they are saying they're going to pay dividends, or do you already have to be an investor in that particular stock?
So you don't have to be an investor in a stock in order to go to the earnings call. You can go to the earnings call for any company out there. You can get their financial statements for any company out there. All of that is available to the public. So when the Securities and Exchange Commission came about in the 1930s, they required that public companies disclose all of their financial information, the most relevant financial information to their investors so that there could be some trust in this investor process. And so all of this information is accessible because it's audited by public companies. Now, I'm not saying that you don't have to do your due diligence when you do look at this information, because a CEO could be saying something that is not right just to protect the image of the company. So you do have to do your due diligence as well. You have to read behind the numbers, see any inconsistencies or something that just doesn't make sense. And then you also have to look at the trends in the marketplace. COVID impacted the world in a way that many CEOs never prepared for. So these are different things that you have to take into account when you're creating your portfolio.
Okay. When you talked about how the stock market kind of fell, well, it wasn't a crash, but it went down. I started investing during the tech bubble. Mm-hmm. And I was in an investment club. I was in 2 different investment clubs. And unfortunately, one just folded. And the other one, there was some hanky-panky going on with the woman who was supposedly having the money to invest us. And so it ended up when we decided to abolish the club, we had a choice of stocks. So my portfolio is still really tech. I never got into, so everything for me is the NASDAQ. Okay. Mm-hmm. And, but what I have noticed here lately, and I didn't know if it was because of that previous person that was in the White House, it had tanked, but it is really, 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 really rising. And so I've got several questions. Okay. Now, if a person is beginning and they feel like they want to educate themselves about the stock market, I know there are a lot of shows I used to watch the Squawk Box, and I used to work out and just, watch the ticker. So do you recommend that in addition to companies that you might be interested in, getting on those calls, do you also recommend watching the TV shows that deal with the stock market?
Yes, I always tell people, if there's anything you want to learn, one, surround yourself around individuals who know it, and 2, watch TV, read about it, read a book, just immerse yourself in the environment so that it becomes your second language. You want to become fluent in that. Everything around you should represent that. And that's how you internalize it and make it a part of you. So I definitely agree with that. You should start having stock market conversations with your friends, asking them, what stocks are you watching? Are you into stocks, or are you looking at exchange traded funds, index funds? What are you investing in? So having these different type of conversations will just help you become more fluent and comfortable, because that's the reason why a lot of people don't invest. They don't speak the language. It's like a foreign language. It's intimidating. And so if we can break down those barriers, if we can make it second nature, I'm sure we would have better success in the marketplace. Usually when we don't understand something, the first sign of gloom, we walk away, we run.
Yeah.
And so in order to have that stick-to-itiveness and to stay in there when times get tough in the stock market, it's important to lead with long-term perspective. And sometimes, and most times, you have to know about the market and what to expect and the cycles in order to be confident with that long-term perspective, even if things aren't going well today.
Okay, now, I know it's a difference between, say, a younger person who decides, they want to start educating themselves about the stock market, and an older person. So for senior citizens, do you suggest that they still, start investing in the stock market? Most senior citizens usually have a pension plan or 401k, but they also, they might have, most of them, I guess, have retirement income. And I know they say you should talk about long term. And then I think there's something about being an aggressive, I think it's called aggressive stocks versus, I'm not sure of the lingo anymore, but let's say a senior citizen, should they look into investing in the stock market?
That's a great question. And so when you're investing in stocks, you have to think about the riskiness of that asset. So stocks are risky. You can lose all your money. And if you are a senior, you want to think about it. How long do I have to recover my money if I lose everything? That can be scary. That is not typically advised to have the majority of your portfolio in risky assets like stocks.
Okay.
So if you were going to do 100% equity portfolio and you are 70, 80, that's risky. But at 70 or 80, you may want to think about passing on some assets to your children and grandchildren. So you can consider opening various accounts that allow you to invest so that you can pass on that money. I really love the Roth IRA. A lot of people don't talk about this. Usually when people talk about investing in the stock market, they're like, oh, let's get on Robinhood and buy the hottest stock. No, there's another way to do it. Robinhood is user friendly. It makes it so easy to just hit that buy button or sell button and get any stock you want. But that doesn't mean it's the best and only way to invest. Robinhood is a taxable brokerage account. So what a lot of people don't realize is if you buy and sell equities on Robinhood, guess what? Robinhood will send you a form, a tax form at the end of the year, letting you know how much you owe in taxes. Now, that's a surprise to many people because they haven't considered taxes in that investing equation. But if you're making money, if you're making profits, the IRS wants a slice of the pie too.
Oh, yes. A big slice.
Exactly. And that's why a lot of people, when they have lower incomes, they use a Roth IRA in order to invest. A Roth IRA, it allows you to invest your after-tax dollars. So this is money that has already been taxed. You create a Roth IRA, you invest it in the assets that you want, and then your money grows. So let's say I put in $3,000. I invested in any growth stock, and it grows to $5,000 the next year. Well, once you hit 59 and a half and have held your account for at least 5 years, you can take out all of your profits tax free. Where does that ever happen? Typically with a 401k, 403b, any other type of employer-sponsored plan or retirement plan, you have to worry about the tax man at the end of the day when you start taking out distributions. And so this one is good because now you're like, oh, wait, if I earn $1 million in my Roth IRA, all of that's mine, free and clear, no worry at all. I get to take that entire $1 million myself and not have to share it because I've already paid taxes on my initial contributions.
Yeah, I should have known that because at my age, I have to, well, I had employee sponsored plan, and I guess it's a 403b, and once you get to be a certain age, they make you take out that minimum withdrawal and tax it.
Yes, people don't talk about that. Required minimum distributions. Once you're 70 and a half, they moved the age up recently because of the Secure Act, or there was another act out there, but they moved the rate.
Where did they move it to?
72, I believe, recently. Oh. 72. That's when you have to start taking out. That was when you had to start taking out your required minimum distributions. I know they made some changes to COVID, but that was it. That's the difference. That's the difference between a traditional IRA that's the difference between a traditional IRA and a Roth IRA, because those are both individual retirement accounts. And every year, well, at least this year for 2021, you can put in up to $6,000 if you're under 50 and $7,000 like a catch-up contribution if you're over 50.
Okay. So if you had a couple of $1,000, let's say someone had a couple of $1,000 and they were looking for something to do with it. Now, we're going to talk about someone younger, like a millennial, and then we're going to talk about a senior citizen. What should they do with that $2,000?
Yeah, so it definitely depends on your financial situation and your goals. Do you have debt? If you have debt, look at the interest rate on your debt.
Yeah.
Look at, do you have a debt repayment plan? How much is that debt costing you, basically? Find that out. But it also depends on how much money you make. So if you make under the income threshold, which is, I don't know the exact threshold, there's different thresholds for each filing status. So if you're single, it's around 130,000. You have to make under that amount in order to qualify to contribute to a Roth IRA. So depending on your income amount, that will determine what you do. So let's say you do make under that threshold. You're making $50,000 a year. You paid off your debt. I would say before you start investing in a taxable brokerage account, look at your financial situation, though. This is just, this is not customized, but it's smart to invest in a Roth IRA because of the tax-free benefits.
Okay. All right. Yeah. Yeah.
But let's say you don't want to invest in a Roth IRA. You just want to go on Robinhood. That's perfectly fine. You can go on Robinhood and invest in assets. But if you sell your stocks before a year, guess what? You are on the hook for short-term capital gains taxes. Those are the same taxes that you pay on your ordinary income. So let's say you made $50,000 from your GameStop stocks. You would be subject to those seven tax rates that we pay on our ordinary income. But if you decide to hold your stocks for over a year, you get special tax rates. The IRS is going to reward you. You get the long-term capital gains tax rates. That's 0%, 15%, and 20%. If you make under a certain amount, so for 2021, that amount is around $40,400, something like that. It changes every year. So if you make under a certain amount, guess what? All your gains from the stock market is tax-free if your total taxable income is under $40,400. So you can make $30,000 from wages and $10,000 from stocks. Your stocks would be tax-free if you've held it in your account for over a year, subject to the long-term capital gains rates.
Oh my goodness.
So those are just different situations. Like with your Roth IRA, if you make under a certain amount, guess what? You get a saver's credit for investing in your retirement account. So if there's a qualified retirement plan that you have, let's say you're making $20,000 because you were unemployed for the year and you decided to contribute to your Roth IRA, the IRS will give you a saver's credit that is based on your filing status, the amount of your contribution, and how much you made for the year.
My goodness gracious.
A lot of people do not take advantage of that. That's why I say contribute to your retirement account, that you might get a credit. And it definitely helps if you owe money. Now you get this credit that offsets your tax liability, which is awesome. Yeah.
Wow. We have a question here from Sarah Crawley. She wants to know what happens to your RMD if you don't take it. But I thought they made you take it.
You're penalized. So for each, you're penalized. You are required minimum distribution. Now, I don't know if it's that way for COVID. I haven't done the RMD research for COVID because I know they've been doing a lot. Like COVID, I think they stopped RMD requirements in 2020.
Oh.
You didn't get penalized. I know this was up to August 31st. I don't know the exact rules, but I know during COVID, you did not get penalized if you did not take it last year.
Really?
Yes.
Wish I had known that.
If you were supposed to start taking your distributions and you did not take it, you did not get penalized.
Oh, because, I thought because my company just automatically sends it. Maybe it's something I signed. quite some time ago. So I thought that was a requirement that you had to take. I didn't know. Well, I understand now about COVID.
Yeah, this is just for COVID. That was just for COVID.
That was just for COVID.
That was just for COVID. If you were required to take it, I don't know if that was first-time individuals who were required to take that RMD for the first time. I'm not sure about those individuals who had been taking required minimum distributions for a period of time. I'll have to get back to you on the exact rules, but I know COVID allowed for you not to be penalized if you did not take the required minimum distribution last year.
All right. Well, Charlene, I got to take a quick break, and then we'll be right back, and we'll talk some more. This is so educational. So if I should have met, well, I did meet you. I did meet you personally.
We weren't talking about this stuff then.
Oh, we were talking about this, Okay, so we will be right back with Charlene Rhineheart. Well, we are back. Now, if you would like to advertise on this show with eye-catching videos and increase your visibility, you can contact us at 1-877-667-7325, or you can email us at jamfornow125@gmail.com. We have a team that's in-house that will do your promos and your videos for you. Now we're going to come back with Charlene. Hey.
Hello again.
Now I've got girl, I got so many questions.
I'm sure.
Questions coming in with the comments, and it's all kinds of questions, and I had some questions myself.
If you want me to get back to the RMD for clarification, I have a point of clarification.
Okay, great.
The CARES Act, it temporarily waived RMD distributions only for calendar year 2020.
Okay. Okay. So now we're gonna go here. Maxine Walker wants to know, I guess you said, where can you get a Roth IRA? Do most banks and institutions have them?
Brokerage firms do. So you have your TD Ameritrade, Charles Schwab, Fidelity. All of those are your top institutions that allow you to open an IRA and various other accounts.
Okay. And as far as diversification, what does that really mean to the average investor person that really doesn't know what that means?
Great question. That means don't put all your eggs in one basket.
Okay.
Because if that one company stock fall, you've lost everything. You want a mix of different either stocks or just different type of assets. Even with stocks, I tell people don't just invest in stocks. Have a portfolio of all of different asset classes that you are comfortable with and that you truly understand, so that when the stock market is down, you can have another asset to rely on. Just like jobs, if you rely on one job and that employer lets you go, you have no income. So it's important to have other passive sources of income if you don't want to work another job, or just something that brings you more money. You just never, when it comes to stocks, jobs, whatever it is in life, you want to, I don't want to say a well-balanced portfolio because it's hard to balance it all, but you want something that gives you security and allows you to sleep at night if that one thing does not go as planned.
So in other words, I'm not diversified. Because everything is in the check. but well, anyway, I'm learning. And so what would you consider the best investment firms for a beginner?
So I can't recommend anyone. I do use different ones.
Okay.
A lot of beginners do love Robinhood because it's user friendly. Robinhood does not give you the full functionality that you would get from a traditional brokerage firm.
Like E-Trade or Ameritrade or...
Exactly.
Okay.
From those brokerage firms, guess what? You'll get access to customer service. They will help you navigate the website and place orders and learn the terminology and give you training, give you tools and resources to make you a better investor. Robinhood, it's just pick up and go. Buy and sell. It's just like you're on Amazon and you're buying shoes, and all you need to do is press that button in order to make that transaction go through. That's how Robinhood is.
Okay.
People are comfortable with it because it's easy. So maybe some people have both. Have a Robinhood account, but also you can have a Robinhood as your taxable brokerage account if you're just starting with a little money. And then if you want to have a Roth IRA, you can go to another brokerage firm, a traditional brokerage firm that will actually give you those resources and customer service to make sure you can do it.
Oh, okay. So we have another question from Brenda Tucker Jeffries. What type of investment would you recommend for those retirees who have a thrift savings plan that doesn't allow them to invest anything into it after retirement?
Yeah, so it's so interesting. So when you have certain employer-sponsored plans, they may not allow you to invest after you've left the company or reach a certain age. And that's where the Roth IRA is so amazing, because there are no age limits for the Roth. And when you're over 50, you get that extra $1,000 catch-up contribution.
Okay. Oh, okay.
So it's something to consider for your portfolio. Depends on your income. It depends on a lot of things if a Roth is good for you. So you don't want to just say, yes, a Roth. You want to look at your income. You want to make sure you meet the requirements, and you want to make sure that it's better for you given your goals and the money that you plan to allocate, because a Roth IRA will only allow you to allocate up to $6,000 or up to $7,000 if you're over 50.
Okay. All right, Brenda, you heard that. So tell us about Wealthy Woman Daily.
Yes, so Wealthy Woman Daily is all about wealthy habits for a wealthy life. It's all about your net worth. We don't talk about net worth often. We often talk about net income. Let's get that job so we can make more money. But what about the net worth? I always tell people net income is what you make, net worth is what you keep. In order to keep your money, you have to be conscious of the decisions you make. Your net worth is the sum of all the decisions that you make every day. So what are you choosing to buy? What are you choosing to sell? What are you choosing to add to your portfolio? Not just your stock portfolio, but your life portfolio. That determines your net worth. And so Wealthy Women Daily, we dig deep into those daily decisions that we make. Choosing to buy potato chips. That could impact our net worth over the long run if we do it every single day, not just financially, but it might impact our health, and we'll be paying those healthcare costs later on because of it. So those are all things to consider when thinking about your life, having a wealthy life.
So your net worth, but doesn't it include other things other than money?
Yeah, so your net worth is your assets, what you own.
Whatever assets you have.
Minus your liabilities, whatever you owe. So your assets can be your cash on hand, savings accounts, money market accounts, all of your retirement plans, your real estate properties that you may own. All of that could be in your asset category. And when you think about your liabilities, you think about the mortgage debt that you still have, the student loan debts, all of those debt obligations that goes in the liability side of the equation, and it reduces the assets that you have. And you're left with your net worth.
Okay. So now, how did you pay off your student loan that quick?
Yes. So it was so funny because at 18, I got accepted into college and they did not give me any scholarship money. And single mom and younger brother and sister, grew up in Inglewood. I'm like, how am I going to do this? My mom was like, we'll find a way. We'll make it work. Just go to the school you want to. And I was like, I don't want to take out loans. So loans are scary because I heard people pay them, forever. It's like somebody else is getting an extra stream of income. I want an extra stream of income. And so loans, I'll be honest, loans scared me. And so I took on multiple jobs. I applied for every scholarship. So that's how I became a writer. I started doing hundreds of scholarship applications. And first, it meant a lot of rejections, but I got better and better at branding myself and showcasing what I wanted to do. And I started getting more scholarships. I did have to take out a loan. Unfortunately, it was a private loan. And because it was a private loan, the interest is much worse than the federal loan. So, when you have a loan that is expensive, you want to pay that off as quickly as possible. So that was my motivation. In school, I started working jobs at Big Four accounting firms. They were giving me sign-in bonuses. I remember I did an internship with a financial services company. I was not going to take the internship, but they told me, hey, we will give you a $7,000 scholarship on top of your sign-in bonus and salary if you work for us this summer. So I took that $7,000. That helped fund my education. So it was a lot of things like that in college that really helped me to pay off my student loan debt before I graduated.
Okay. So now you founded Career Goddess Academy.
Yes.
Tell us about Career Goddess Academy.
Yes, well, it's all about creating career success and a lifestyle you love. And when it comes to career success, we should all know that there is no one size fits all career. And you have to define success on your own terms.
Okay.
So I expose individuals to different career paths they can take. I interview a lot of people who've went down various paths so that people can know what their options are. Most of the time, we have no idea that this wonderful opportunity exists until we're exposed to someone who's done it. So I try to highlight these amazing individuals so people can see, hey, this is the roadmap to success in this field if that's where you want to go.
Oh, okay. So now you give workshops or do you do one-on-ones or a group, or how does that work?
I used to do a lot of coaching, a lot of resume development, because it all starts with your resume. If you want to land any job, you have to make yourself attractive for that opportunity you want to provide. I always tell people, provide bait. You want these opportunities to come to you instead of you being in a long line trying to apply for the opportunity. So what does that mean? What does that look like? If you wanted to be a teacher, what would make you stand out among everybody else, even if you don't have a background in teaching? How can you use who you are, use your gifts to stand out in front of any crowd?
Okay. So now it says career goddess. So it's women only?
And I do focus on women. And because it's a confidence piece of it that I really want to instill in women, I constantly heard women say, I don't want to quit my job. I'm scared. I don't know if somebody else will appreciate the skills I have. I don't even know what skills I have. So that career guidance piece of it is, you're amazing. You got this far. There's something in you that allowed you to get this far. And if you have years of experience, there's something you've done in those years to get here. So what is it? We pull it out of you, because once you realize your value, you understand that you are worthy, and you walk into situations more confident, and that allows you to attract the career success that you want. You do not need 5 different job titles, or you don't need all of this. And we as women, we think we need so much. It's about owning the space we are in, owning the gifts that we have, so that we can take charge and be who we are in any career that we choose.
Okay. And so how often with your Career Goddess Academy, what is it, like a 6-week course, an 8-week course, or how does it work? I mean, if you know, if they want to attend it, is it on, well, probably, I know it's not in person now, but previously, was it in person, and is it still going on virtually, or what?
I'm actually in the process of creating courses now to transition so that people can have on-demand access to these courses. What I was doing previously, I was doing one-off workshops or doing my own webinars for individuals. But now I want to make sure I have everything in one space so that people can access it. So stay tuned for the new and approved Career Guys Academy, because I know it's needed right now.
And you're right. So now, how do relationships, because this is Relationship Matters, and we talk, and this show, we talk about all kinds of relationships. Now, tonight, we're talking about our relationship with money. Mm-hmm. But relationships, period. How do relationships play a part in your career and your lifestyle?
Well, that is a good question. I feel that you are some of the people that you associate with the most.
Okay.
Which means that you have to be really intentional about the energy that you are attracting into your life. Here's how it's always been in my life. I would write down my goals, the goals that I had for each area of my life. And then I would surround myself with individuals who were a reflection of that. And that always helped me to achieve my goal faster. And it eliminated a lot of the friction that you would typically find if you're around people who may not believe in your ideas, who may think it's too big. Now you're around big thinkers who show you, oh, you're actually thinking too small. You can actually do this. So it really transforms how you think about life and what's possible. So that's key to me. Before I do anything, I want to make sure that I'm in a space with people who are a reflection of the goals that I have.
Okay. All right. Now I know you do. You know, I follow you, and every time, and I'll see you here, you there, you're everywhere. So you do a lot of traveling. And now, when you're traveling, is this for your business, or is this for pleasure, or is this lifestyle, this dream lifestyle?
Yes, great question. So in 2016, in 2015, I left my job and was traveling in various states in the US. But then in 2016, I started dancing and singing, traveling around the world with Up With People. So I did that for 6 months.
Oh,
after dancing and singing for 6 months, and I stayed with host families from all over the world. Some people did not even speak English. And it was even more amazing because I had a chance to really break out of my comfort zone, learn something new, interact with people who I wouldn't have had a chance to if I wasn't up with people. So that experience changed my life. After the 6 months, I was like, I can't go back to an ordinary job. I don't even know what to do with my life now. I have to continue traveling. And so I found ways to travel. I became a travel writer. That helped when I got one travel assignment, but then I also found ways to manage my money so that I could travel more. I just attracted just a lot of travel opportunities. In 2019, I didn't even plan anything. So in 2019, I decided that, hey, I just want to travel. I'm going to book a one-way flight to London. I don't know where that will lead me, but I want to enjoy this moment and the space that I'm in right now. I'll figure it out later. So I traveled to London, Spain, Malta, Luxembourg. I had no idea what some of them countries like entailed, but I decided to not plan anything because my life was always planned. I just wanted that freedom to just go where I felt like I was led at that moment and see what would happen. And it turned out to be an amazing experience. And then COVID happened. So I've been at home since then.
Now you wrote a book, and your book is called Dividends Are a Queen's Best Friends.
Yes.
And so that's available on Amazon.
Yes, it is.
Okay. And so then it will tell us all about, just a little bit about what you already told us, but it delves into it a lot more so that we can all understand what dividends are.
Yes. So before we get into what dividends are, I like to tell people what dividends represent. Okay. And for a lot of people, dividends represent freedom. It means that I can attract this passive source of income without lifting a finger. I can have more time to do the things I love. Now, this is how all of that works. When you invest in the stock market, you can invest in a variety of stocks. Some stocks will give you income. You can get income every 3 months, or whenever the board of directors declares a dividend, you can get access to income. So now you can create how much income, you can determine how much income you receive every quarter by creating a dividend money plan.
Oh.
It's pretty amazing. I love dividends because there is no limit to how many dividends you can receive. You know, at your job, you may be limited to $5,000 a month, but with dividends, as long as you're putting in money, building your portfolio, you get access to that steady stream of income for life. Even if you stop putting in money, guess what? You'll still get access to that money because you've already contributed and you are an investor, and the company will reward you for being loyal and sticking in the long run. Yes.
Well, everybody, you know what? You heard the queen. Now, quickly, before we go, we have maybe about 2 minutes, about 3 minutes. Someone asked a question about Bitcoin.
Ooh.
So quickly, what do you think about Bitcoin?
Good question. Well, I feel that if you are thinking about a diversified asset and if you are willing to take on the risk, why not? But understand what you're getting into. I taught Bitcoin classes in 2017. I'll be honest. I taught in 2017. I was telling people about this digital currency that had the power to change how we made transactions. So think about the blockchain, think about cryptocurrency. Bitcoin is only one cryptocurrency, but I think it's an excellent learning opportunity. If not anything else, it's an excellent learning opportunity. You just want to know what you're getting into.
And it's not regulated. I do know that.
It's decentralized. Yes.
Yeah, right. But I see that more and more companies are accepting Bitcoin. But what scares me about it is the fluctuation. You know, first it's up here, then it's down there, and then it's up here, then it's down there. And I invested a little in Bitcoin but it just, to me, it just was so complicated. Uh, uh, and the first time, you have to have this sign in or code or whatever, and it was long. It's long, and then I lost it, couldn't find it. But fortunately, I had not invested that much, But yeah, that's something that that's a little interesting. I think it's the currency of the future, but long time future.
Yes,
But
you have to start thinking
yes,
about the companies that are
Charlene,
involved.
I want to thank you for coming on. This has been so informational, so educational, and people, audience, I'm so happy that you tuned in, because this is information that you really need. Un- I'm not going to say unfortunately, but the world revolves around money. And Charlene has offered us some advice for if you're younger or if you're older, like me, what to do with your money. What to do with your money as far as your livelihood and how you sustain yourself. But Charlene, I want to thank you. And I gotta have you back again, girl. Look, it was so many questions, and they just still coming in. I'm like, I don't have to. We can't answer all these questions.
Let's do it again. This was fun.
Yeah, we have to do this again, because it's just so many questions. So many of the audience just have so many questions, and I'm like, okay, well, I'm just trying to get as many as I can. But this, I tell you what, I think this is Carol, because she comes in as Facebook user, but great insight. Great insight. Thank you so much, Charlene. I want you to have a beautiful, blessed rest of your evening.
You too. Thank you so much, Dr. Janice Fortman.
All righty. Take care.
You too. Bye-bye.
Bye-bye. This has been so educational and informational for me. I want you all to grab your copy of Dividends Are a Queen's Best Friend. Go to Amazon. I'm sure it's an ebook and a hard copy, but I would suggest that you get the hard copy. Well, I'm old school, so I like hard copies. So, but thank everyone who came in this evening. It's been a fantastic show. I want you to tune in next week when I will have on the show a very important show about cyber security. You need to attend that show. In the meantime, in between time, have a beautiful, blessed rest of your day. Remember, relationships matter because there are all kinds of relationship matters. See you next week. Bye-bye.